Hey everyone, welcome back. Today we're talking about something that could actually change the way millions of Americans bring home their pay, especially if you've ever worked in a restaurant, salon, or anything where tips are a big part of your income. The No Tax on Tips Act just passed the Senate, and yes, it was unanimous. That's not something we hear often, but here's what most people don't realize. This isn't just about saving a few bucks on your tax return. It could shift how tips are treated in the workplace, how employers pay wages, and how people plan their finances going forward. And for anyone who's ever waited tables, driven for a rideshare app, or worked behind a bar, this might feel personal. Because it is. It's not just numbers on paper. It's about fairness, recognition, and keeping more of what you earn. And before we get into it, I'd love to hear your thoughts. Have you ever worked a tip job, or do you rely on tips now? Drop a comment below. I read them all, and it really helps shape what we talk about next. And if you find this kind of breakdown helpful, go ahead and hit that subscribe button. It means a lot and helps more people find content that gives them the full picture. So the basics first. The No Tax on Tips Act would allow workers to deduct up to $25,000 in tips from their federal income taxes. That's tips earned through cash, cards, or any payment system your employer processes. Now, this doesn't mean all taxes disappear. Payroll taxes like Social Security and Medicare still apply. But when it comes to your income tax, this deduction could make a noticeable difference. Let's say you're a server who makes around $45,000 a year, and $20,000 of that is tips. Under this bill, you could deduct the entire $20,000 in tips. If you're taxed at a rate of 22%, that's about $4,400 in tax savings. That's rent, that's groceries, that's breathing room. But it's not just any worker who qualifies. The total income has to be under $160,000, which is actually pretty generous for a cap. And only workers in occupations that have traditionally and customarily received tips as of the end of 2023 are eligible. So if your job only recently started accepting tips, like say, some cashiers or retail clerks, it's possible you won't qualify. The Treasury is expected to release a list of approved job categories within 90 days of the bill becoming law. And something I know a lot of people were wondering, no, this does not affect your minimum wage. The tipped minimum wage at the federal level is still $2.13. That hasn't changed since 1991. The idea behind that low number was always that tips would fill the gap. But as we know, that's not always how it works out. So then why now? Well, part of the answer is political. President Trump introduced this idea during his 2024 campaign. He pitched it as a direct way to help service workers, especially in places like Nevada, where tips are a huge part of people's earnings. Interestingly, his opponent, Kamala Harris, also supported it. So it gained this rare, kind of bipartisan traction we don't usually see in Washington. And when it got to the Senate, it passed without a single objection. That tells you just how popular this idea is, at least on the surface. But when you look underneath, that's where things start to get a little more complicated. One argument from supporters is that this bill is about fairness. People who earn tips are often living paycheck to paycheck. They're working long hours in physically demanding jobs, and they don't always get health benefits or consistent schedules. Letting them keep more of what they earn feels like the least we can do. But then you have the critics who say, hold on, is this actually fair to everyone? Think about it this way. Imagine a cashier and a waitress, both making $35,000 a year. Under this law, the waitress could get a big tax break because her earnings come through tips. The cashier doesn't. They both work hard. They both deal with people all day, but only one gets a break. Is that fair? And also, there's concern about employers using this new rule to justify keeping base wages low. If tips are going to be tax-free, wouldn't it be tempting for businesses to lean even harder into tipping and pull back on raising salaries? That's one of those longer-term effects we'll need to watch for. You see, tipping has a pretty loaded history in the United States. It actually has roots going back to the post-Civil War era, when it was used as a way to avoid paying newly freed black workers a full wage. Over time, it became a cultural norm, especially in hospitality and beauty services, but the economics haven't always worked in workers' favor. And what about tax enforcement? Right now, The IRS requires workers to report any tips over $20 a month. But we all know how uneven tip reporting can be. Cash tips often go unreported. Some people round down or just forget. And now, with this deduction in place, there's a bigger incentive to report tips accurately, but also maybe to get a little creative. Though, the bill does make it clear, only reported tips count. So if you want the deduction, you have to play by the rules. That could encourage more transparency, which is a good thing, but it might also put more pressure on workers to track and report every dollar, even if their employer doesn't make it easy. And speaking of employers, there's something else in the bill that's worth noting. It expands a tax credit called the 45B credit. This helps employers offset the payroll taxes they pay on tips. Before, it mostly applied to restaurants, but now it includes salons, spas, and other beauty service providers. That could be a win for small business owners in those industries, helping them stay afloat while still supporting their staff. Now, what about the bigger picture? According to researchers at Yale's Budget Lab, this law could cost the federal government between $10 and $15 billion a year in lost tax revenue. That's money that would have gone to programs, infrastructure, and services. Some lawmakers argue that's too steep a price for a tax break that doesn't benefit everyone equally. And also, not everyone working in tipped roles will benefit. The House version of the bill, which is still being debated, has some more strict language. For example, it might require a valid Social Security number, which could exclude undocumented workers, many of whom are heavily represented in tipped roles. There's also a proposed expiration date for the tax break after 2028, so it's not necessarily a forever change. Another thing to consider is how this could shape customer behavior. Will people feel more comfortable tipping if they know the worker keeps more of it? Will businesses use this as a marketing angle? Imagine signs at the register that say, "Your tips go further, tax-free." It could work, but it also walks a fine line. We don't want tipping to become even more of an expectation in situations where it's not traditionally part of the job. Now, I get that some of this sounds like wonky policy stuff, but the core of it comes down to something we all understand: money. Whether you're earning it, spending it, or saving it, how much you keep in your pocket matters. And this law could be a big help for people who rely on tips to make their budget work each month. So what does this mean for you? If you're working a tipped job and your income is under $160,000 a year, this could mean more money in your pocket starting next tax season. But only if your tips are properly reported, and only if your role is on the official list the Treasury will publish. And if you're an employer, especially in hospitality or beauty services, you may have some new incentives to structure wages and payroll a bit differently. That could be good, but it'll also require some careful planning and maybe even some professional tax advice. If you're someone who's never worked a tip job, this law might not change your life directly, but it's still worth paying attention to. It's a rare moment where something got passed with support from both sides of the aisle. That alone is meaningful, especially in a time where it feels like most news out of Washington is about disagreement. Let me know what you think in the comments. Do you work in a tipped role? Do you think this bill helps? Or does it raise new questions? I'd love to hear your story. The more we talk about this, the more we understand how these policies affect real people. And if you haven't already, don't forget to subscribe so you don't miss future updates on this and other money topics that matter to you. Whether it's tax changes, budgeting strategies, or just how to make the most of what you earn, we're here to help break it all down in a way that actually makes sense. Thanks for being here, and I'll see you next time.